Hi, this is Jerry Bowyer. You're watching the Eagle Investing Network. Make sure to subscribe and also share the wealth. Not the wealth, but share the knowledge that leads to wealth by sharing this link with somebody else. We've been talking about some of the problems with the U.S. economy, some of the headwinds we face, debasement of currency, exploding debt, and declining demographics. That has implications for investment because of something called home bias. Home bias is the tendency for people to invest only or disproportionately in their own home economy. In other words, if you live in the United States of America, you tend to invest only in the United States of America or almost exclusively in the United States of America. The problem is that you're really only investing in about 1/4 of the global economy. And you're investing in a quarter of the global economy that is growing slower than the rest of the world, that has exploding debt and has a declining workforce. And as we saw recently, has dropped in the competitiveness index ranking from consistently top one, maybe two, now down to 10th from the top. So in order to take advantage of true competitiveness in the global economy and a lot of the opportunities that are going on, not just in the United States, but around the world, we need to turn our attention to other countries. And one of the things we want to look at is competitiveness. Now, I showed you overall competitiveness in a previous video. Now, what I want to do is show you some specific, more targeted studies, data, which look at certain kinds of competitiveness that are more important for investment returns than others. Let's look at the data. This data is coming from the IMD World Competitiveness Center in Switzerland. They put out an annual ranking, IMD World Talent Ranking. Well, what goes into a World Talent Ranking? Well, they've got three categories: investment and development, appeal, and readiness. Investment and development is, do they have a good pupil to teacher ratio? Do they have apprenticeship programs as opposed to just depending on college as a way to educate the workforce, when there's actually a lot of very important jobs that aren't college jobs. They're technical jobs, they're vocational jobs, and they involve apprenticeships. Well, if countries are good at that, we count it. Employees, are they well trained for the job, or do you just throw an employee into the mix and not really tell them how to do the job? That's how you do investment and development in talent. Well, what about appeal? You have to be able to attract talented, productive workers, or if you already have them, you've got to be able to keep them. Is it affordable, reasonably affordable in terms of a cost of living? Are you good at attracting and retaining talent? Well, how do you measure that? Do people come there from other countries who have high levels of skills or high levels of education? Do highly productive people stay in your country? Are workers motivated? Some people just, their life is a continual Dilbert cartoon. They're just in the cubicle. They hate it. They are not committed to what they're doing, but they need it for the paycheck. Do you have a quality of life that attracts certain kinds of people? Do you have a personal income tax and corporate tax rate that doesn't punish people for being productive? These are the kinds of things that we look at. Is there good justice? If you have a bad justice system, then what can happen is people can vote their wealth away from productive people, take the property of productive people. Then finally, is there readiness? Do you have a labor force that's growing? We don't in the United States. Is your labor force skilled? It's not just a matter of having people who are of working age. They have to actually have skills. They can be technical skills, hand skills, manual labor skills, or finance skills. They look at that. It can be international experience. It can be management skills. Do they have education? Not just education in general, but are they science and technological graduates? These kinds of things matter. Or management education. Do they know business? Are they business majors or science or technology majors? Student mobility inbound. Do people come to your country to study technical subjects in your universities and then stay after? And then what do the actual tests say about knowledge? Universal test, not just did you go to school, but did you learn something? These are the kinds of things that they look at in order to make this determination. And that's how they measure talent. Now, let's say that you take all the countries at any given time and you say, let's look at the countries that are in the top fifth. These are the best countries at talent scores, at talent ranking, the things that I just described, those factors I just described. We're going to take all of those countries and we're going to put them in this bucket right here. They're in this bucket. And then there's going to be a bucket which is the second best fifth. And so that'll be 20%, 40%. This will be the middle fifth, middle quintile. Quintile just means fifth. And then the second worst, and then the worst of them. And we're going to put them in buckets. We're going to put these countries in buckets. And then we're going to imagine that that bucket is an investment portfolio. We're going to create a little, you can call it a mutual fund, really it's just an index. We're going to create a little investment portfolio that is made up of the top fifth most talent competitiveness countries. And then we're going to ask the question, what was the stock market performance next year, specifically the next 6 months? And we see here in that best quintile, that was 5.71%. Now, let's say you think, oh, I don't care about that. It doesn't matter whether they do well in this talent ranking. So I'm going to put the money in the second best group. I don't think that it really matters, so I'm going to do the second best group. Well, there it is. And what you see is a huge drop-off in stock market returns in the following 6 months. So you're looking in the beginning of that 6-month period. So this doesn't have look-back advantage. It's not knowing the future. What is their ranking? And then what happens in investment returns after if you invest in a broad group of those stocks? And what we see is if you go for second best rather than best, you don't get nearly as good return. Let's look at the next one. This is middle of the road, another step down, although this is the big step down from best to middle of the road. This next bucket, kind of middle of the road, but a little worse. So this is second from the worst. This will be the worst. Another significant step down. Do you want 5.71% return or do you want 2.4% return? Well, I'm not talking about the future. I can't make any promises about the future. But if we look at the past, that's the difference that you get by investing in the third best rather than the best. And then the worst. These are poorly ranked in terms of talent competitiveness. People aren't moving there, they're moving away from there. Their labor market isn't growing. People don't have technical skills. They're not actually committed to their jobs. Whatever the problem is, there's a whole bunch of problems they can have. This is the group that isn't doing very well. So if you look at the past, investing in the most competitive in terms of attracting and keeping productive, talented workers versus the worst, it is a big difference in investment returns in the following 6 months. So this is something that certainly is something you want to be keeping account of and keeping track of when you're making investment decisions across international borders. Remember, this is not just a United States story. In fact, I looked at the data and the United States is falling off. We generally do pretty well, but we're actually going down in this index. We used to attract talent from all around the world and we had this great educational system and we were producing tons and tons of science and technology grads and lots of business knowledge and people testing well in objective scoring. I'm not talking about whether they got A's or B's in school because that can depend on whether teachers are giving out easy A's, but what they actually know using objective standardized testing. And we're falling off a little bit and parts of the world are rising, including East Asia. And even Europe is actually pretty competitive. So a lot of investors have left Europe for dead. And that actually was a mistake because Europe has seen some significant overperformance on and off in the past couple of years. So talent matters. If you're making investment decisions, you are better off, all of the things being equal, looking at past data, if you're moving money to where the people are moved, to where the talented people are moving. If the money follows the intellectual capital, the business ability, the commitment to business as an enterprise, places where you're not punished for being productive, historically, that can produce significant overperformance. I'm Jerry Bowyer. You're watching the Eagle Investing Network. Thanks as always for joining us. Make sure to hit subscribe if you haven't, and then you can grow in your talent and knowledge of business along with the people measured in this talent index. Thank you.